Every Bitcoin cycle bottom in history. The 5 signals that always show up. Quick note before we start, nothing on this channel is financial advice. I'm an analyst and a builder. Mantis is a cycle analysis tool. What you do with that information is entirely your own decision. There is a version of Bitcoin analysis that sounds rigorous but isn't. It picks a chart pattern, runs it against the 1 or 2 times it worked, and declares a framework. The sample size is 3. The confirmation bias is invisible, and the next time the pattern fails, the explanation arrives immediately. This time was different. This video is the opposite of that. What you're about to see is not a prediction. It is a pattern recognition exercise across 15 years of Bitcoin data. 4 bear market bottoms, looking for the 5th. Asking a simple question: what actually showed up every single time before and at the bottom? Not what the analysts were saying, not what the narrative was, what the data showed. The answer is 5 signals, the same 5, every time. Before we go through the history, here are the 5 signals. Each one can be observed objectively. No discretion required, no reading between the lines. Signal 1. The 200-week simple moving average. Bitcoin has touched or briefly broken below this line at every single cycle bottom in its history. Not approached, not come close touched. Signal 2. Monthly red candle exhaustion. A streak of consecutive monthly red closes builds during the bear market. The bottom forms inside the streak, not after it ends. Signal 3. A capitulation event. A visible, identifiable moment of maximum fear. A black swan. An exchange collapse. A regulatory shock. A minor cascade. The kind of event that makes mainstream media run headlines about the death of Bitcoin. Signal 4. Extreme sentiment. The caps lock posts are doom. The large accounts have gone quiet or changed their tune. The phrase "this time is different" is being used, but in the bearish direction. The bottom always arrives when the crowd has fully given up. Signal 5. Confirmation. A swing low forms. Price breaks the descending trend line to the upside. The 10-week moving average is crossed. 3 signals in sequence from price action itself. 5 signals. Let's look at the record. Before we look at the modern cycles, we go back to the beginning. November 2011. Bitcoin was 2 years old. The price had run from under $1 to $32 in a matter of months, driven almost entirely by the rise of Mt. Gox, the world's first major exchange. Then it crashed 93% to approximately $2.14. One note before we go through the signals. Bitcoin did not yet have 200 weeks of price history in November 2011. The 200-week moving average, as we know it today, simply did not have enough data to be fully meaningful. This is the one bottom in history where that signal is structurally absent. Not because it failed, but because the asset wasn't old enough. Every other signal was clearly present. Signal 2, monthly red candle exhaustion. 5 months of consecutive red closes from the June peak to the November low. A grinding, relentless decline with no meaningful relief. Signal 3, the capitulation event. June 2011, Mt. Gox was hacked. A security breach caused a flash crash on the exchange, briefly driving the nominal price to a penny before recovering. The breach exposed hundreds of thousands of user accounts. The narrative immediately became the exchange that made Bitcoin mainstream would be its undoing. Signal 4, extreme sentiment. The mainstream press declared Bitcoin an experiment that had failed. The first wave of "Bitcoin is dead" posts arrived, genuine eulogies from people who believed it. The technology was flawed. The community was too small. The dream was over. Signal 5, confirmation. A swing low formed in November 2011. Price recovered through early 2012. The 10-week moving average was crossed. The run that followed took Bitcoin from $2 to over $1,000 in just over 2 years. 4 out of 5 signals. The 5th, the 200-week SMA, would arrive fully in every cycle that followed. The 2013 peak. Bitcoin touched $1,100 and fell 85% over the next 2 years to approximately $160 in August 2015. Signal 1, the 200-week SMA. touched. The line had been rising throughout the cycle, and price came down to meet it at the bottom. Signal 2, monthly red candle exhaustion. The decline from the 2013 peak produced over a year of consecutive red monthly closes. The streak was extreme, and the bottom formed inside it. Signal 3, the capitulation event. February 2014, Mt. Gox, the world's largest Bitcoin exchange, halted withdrawals and filed for bankruptcy. 850,000 Bitcoin gone. It was the defining crisis of that era. The crowd declared Bitcoin finished. Signal 4, extreme sentiment. 2014 and 2015 saw some of the most pronounced Bitcoin is dead narratives on record. The mainstream press ran obituaries. The venture capital money was drying up. The developers were leaving. The crowd had fully capitulated. Signal 5, confirmation. A swing low formed in August 2015. Price broke the descending trend line. The 10-week moving average was crossed. The next bull run, over 3,000%, began quietly with almost nobody watching. 5 signals, all 5 present. The 2017 peak. Bitcoin touched just under $20,000 and fell 84% to approximately $3,100 in December 2018. Signal 1. The 200-week SMA touched. Price came down to the line during the final flush and held to the day. Signal 2. Monthly red candle exhaustion. 6 consecutive red monthly closes. The streak ran from June through November 2018. The bottom formed in the 6th month of the streak, not after it ended. Signal 3, the capitulation event, November the 15th, 2018. The Bitcoin Cash network split into 2 competing chains, the Bitcoin Cash and Bitcoin Satoshi Vision Hash war. Miners began selling enormous quantities of Bitcoin to fund the conflict. The market read it as existential. Exchange volumes exploded. Price fell 25% in a single week. Signal 4, extreme sentiment. Blockchain, not Bitcoin, was the dominant narrative. The underlying technology was being separated from the asset. Institutions weren't coming. The retail investor had been wiped out. The crowd had moved on. Signal 5, confirmation. The swing low formed in December 2018. Trendline break followed. 10-week moving average crossed in early 2019. The next bull run, over 3,000% in 12 months, began as quietly as the last one. 5 signals, all 5 present. The 2021 peak, Bitcoin touched $69,000 and fell 77% to approximately $15,500 in November 2022. Signal 1, the 200-week SMA touched and briefly broken for the first time in Bitcoin's history. Price pierced below the 200-week SMA during the final flush. It recovered within days. The line held as support on the monthly close. Signal 2, monthly red candle exhaustion. 9 consecutive red monthly closes, the longest streak in Bitcoin history at the time. The bottom formed in the 9th month. Signal 3, the capitulation event. November the 8th, 2022, FTX, the world's 3rd largest crypto exchange, halted withdrawals. Within 72 hours, it had filed for bankruptcy. $32 billion in customer funds gone. Contagion spread across the entire industry. BlockFi, Genesis, Gemini, Earn, dominoes falling. Signal 4. Extreme sentiment. The mainstream press ran wall-to-wall obituaries, Senate hearings, criminal indictments. Crypto winter became the dominant phrase. The 4-year cycle was declared dead by some of the largest accounts in the space. Signal 5, confirmation. The swing low formed in November 2022. Price broke the descending trend line in January 2023. 10-week moving average crossed. The next bull run, over 500% to a new all-time high, began as everyone was still writing post-mortems on the asset class. 5 signals, all 5 present. 4 bottoms, 4 completely different narratives, 4 completely different capitulation events, 4 completely different time frames, and the same signals every time. This is not coincidence, and it is not prediction. It is pattern recognition across 15 years of data, the same repeating structure showing up regardless of the external circumstances. The capitulation event changes every cycle. In 2011, it was a hack on the world's first exchange. In 2014, it was the collapse of that same exchange. In 2018, it was a hash war between competing Bitcoin factions. In 2022, it It was outright fraud. The market doesn't repeat the same shock, but the structure around the shock, the exhausted monthly candles, the 200-week SMA touch, the sentiment collapse, the confirmation signals, that repeats every time. The news provides the event, the cycle provides the structure, and critically, none of the 5 signals are predictive on their own. The 200-week SMA touch without confirmation is not a buy signal. Extreme sentiment without a swing low forming is not a buy signal. The checklist works as a system. When all 5 are present in the right sequence, the bottom has already formed. Which brings us to the current cycle. Signal 1, the 200-week SMA, not yet touched. The line is rising and price has not come down to meet it. Signal 2, monthly red candle exhaustion. The streak is building. But based on prior cycles, it is not yet at the level of exhaustion that has historically coincided with a bottom. Signal 3, the capitulation event, not yet identified. There have been sharp moves and sharp headlines. None of them match the signature of the capitulation events seen at prior bottoms. Signal 4, extreme sentiment. Right now, the dominant sentiment is bullish. The caps lock posts are calling new all-time highs. The crowd has not capitulated. This is the inverse of the signal we are looking for. Signal 5, confirmation. No swing low has formed. No trend line has been broken to the upside. No 10-week moving average cross. None of the 3 confirmation signals are present. 0 out of 5. That is not a bearish prediction. It is an observation. 4 bear market bottoms, 15 years of data. The bottom has never arrived before these signals were present. Not once. And right now, none of them are. When they start appearing, you will know. Not from the narrative, from the checklist. 4 bear market bottoms. The names change, the events change, the headlines change, the structure doesn't. 200-week SMA touch, monthly red candle exhaustion, a capitulation event, extreme sentiment, confirmation from price, 5 signals in sequence. Every time the bottom forms in the streak, not after it ends. It arrives when the crowd has given up, not when they're calling all-time highs. It is confirmed by price action, not by narrative. When those 5 signals align, the checklist is complete. That is when the accumulator fires. Until then, step back, set your alerts, let the cycle do the work.